The next frontier of discussion is going to be on the certain commentaries that I've seen or I continue to see on the X platform as we continue to kind of discuss a few more things about finance and investment. And this video is also going to be so much for those in the diaspora because I believe they're the ones who mostly have access to other markets. Now it started off when Samson Kasumba was giving an assessment of the land in Chiwenda versus Namlonge, and I gave this reply that an acre of, if someone had that same money invested in a different unit trust or treasury bond, they would have much more. And for today's discussion, I'm not even going to concentrate on the land. Today's discussion is going to be driven by this reply I got from Mandela Nelson, who said if someone had purchased a dollar bond in 2014, they would have more money than someone who would have invested in the UGX. And you can see the inflation gain that would have been lost and everything. And when you come down here, an investor in 2014 who invested in 200,000 in a USD bond would be getting around 8% per annum. Now, I know there are bonds in other FX, which is not in other stronger currencies that offer 8%. There are different ETFs and everything. So I agree with him. But the question for me is, where are they? What return would it be? So today's conversation is going to be based off that. And the other second point which I want to note before we even kick it off is this. One of the things we have to appreciate about Uganda, this is the UGX versus the USD over a 12-year period. We entered 2014 when we are at around 2,800. Then between 2014 to 2016, we reached around 3,500. Since then, from 2016 to currently, our FX has been consistently stable. You know, our USD to UGX has been consistently stable to an extent that you do actually realize the highest points have been once every 3 years. Once every 3 years. At one point, we came back in 2020 to 2021, we came back to 3,500 and we spent there close to 2 years. So, one of the benefits of that is people who have invested in UGX have not lost so much FX compared to those who have invested in the USD. When you appreciate that, then it starts to make a little bit of more sense that for as long as our FX has been stable, then what does it mean if I've invested in the USD versus the UGX? The point Nelson was making. Let's look at the numbers. Like so many things can lie, but numbers do not lie. You know. So I'll start off with the dollar term, and I'll make this bigger. Let's make two assumptions here that the person investing in this, whichever decision they are making in 2014, because he took us back in 2014, and we know in 2014 we have seen UGX and USD. This was one, this was 2,800. Let's use an average of that. So let's make two assumptions. One, the investor is in it to maximize return. You are in the diaspora, you have hit a target, you have got a bonus, you're working very hard, or even you are in Uganda and somehow you have 100,000 US dollars. And someone tells you, and I'm going to be generous. On his side, he said, I'll go back quickly to him. Returns of 8% per annum. So let me use 10, let me use 9%. I'll be generous because that's an average return that you get on US dollar, high yield US dollar investments. So someone is in it to maximize return, and they understand the power of compounding, which means they're going to invest this money, and even the profits that they're going to get from it and going to reinvest into that. And I'm going to still make the position to say someone should do it at least for a minimum of 10 years, because some of the best investments you benefit from them over a long period of time. Otherwise, if you are going to go into it for 1 year and move out, 1 year and move out, you are not investing, you are trading. Most times, people who do short term, they are trading. They are investing, but it's not the best way to. So let's look at it at over a 10-year period. So someone who had $10,000, right? $100,000 and they could get just 9%, what would it get? And I'm assuming 9% is even after tax. Let me even put it that way, which means if it's after tax, that means you are literally getting around close to 11% gross. So I'm being generous to give it to that. But at 9% after tax, it means in the first year, you got $9,000. Now, at the end of 2014, you had $109. Then you reinvested the 9,000, and in the next year you got 9,810, and like that. For those of you who have been following me for a while, you know what that means. So I'll take out that one will come back for when I'm dealing with Kasumba in another video. For now, let's focus on Nelson. So that means every single year, whatever income you were making net after tax, you could put it back in for it to grow. You know, well, if you had put that money into an ETFs, they automatically compound. ETFs or mutual fund, and they are giving you close to 9% after management fees and everything. They could automatically compound themselves, which means your income every single year is added onto your principal, and it keeps growing and it keeps compounding. You know, and that means from 2014, 12 years later, by 2025, you'd be at 281. Amazing return. Amazing return. And that's a good return because it means um in the US they say if you have $100,000, it could take you around 20 to 25 to turn it into $1 million if you're just investing in the safest investments possible. So this person who has invested in the US in an ETF that can offer you 9%, that is what you're going to get. What Nelson was talking about. What about the UAGX? I'll come back to this graph that we have become so familiar with. I've explained the UGX here. So let's see Uganda 5 year, and we go back to 2014. You know, give it a second for it to load. So here we are. So what we are going to track, this is the current 5 year bond, but it's the longest which we can track. It existed in 2014 when it first came to the market. It first came to the market at around 15.3. So over time, treasury bonds in Uganda have r- averagely been between 15% to around 16% over time, the return. But let's be generous possible to say on average it has returned 15%. So 15%, if someone had invested 15%, but remember at the end of the day, the same assumptions we made, someone should be willing to invest for 10 years. Two, this person had, like we said, USD UGX. Let's do it. One is 2,800. So now this person now had their 100,000, which means they would have 100,000 USD. So which means they would have around 280 million. I'll put it there that way. That's the money we are starting with. And we are using an average return of 15% per annum, which is in Uganda, it has been that for the past 10, 15, 12, 15 years on long term treasury bonds. Like we said, someone is investing for 10 years and above. If it's 3 years, 2 years, it changes the numbers. But if it's 10 years and above, then 15% is fair. So that means someone, the first time they invested this amount, 280,000, they got 42 million. Even if I am to put this at 14%, actually, let me even be very generous at 14%, they got 39 million. In 2014, we said interest rate was 29. We can use that. Boom. USD equivalent of income. Now, this person, because we are saying we're talking about someone who understands the market and is willing to play the long-term game, I would also take this out. I'll come back to it later. They invested back at this money. In 2015, this is the amount they got. In 2016, this is the amount they got. Like that. You can see, I can easily say in 2015, interest rates reached 33, right? Then in 2016, they reached 35. Then by 2017, they had reached 37. I can even take it to 37 since then. Since then, the interest rates have been around that time. So by the time this money starts to compound, in UGX equivalent, someone who had $100,000, which is 280 million in 2014, at this point, I'm talking about someone who had that money, not someone who contributed towards it. But in 2014, you had the money. Then all of a sudden, if someone had gone to the UGX equivalent, you know, they would have close to 1.3 billion, you know. So actually, this will be confusing. Let me take it out at once and I compare this at once, right? And that 1.3 billion right now is literally around 3650 right now, is around 370,000 US dollars. How much does the USD bond person has? 280. That means the person who has invested in the UGX bonds is almost 90,000 grand, $90,000 over and above. That means if you had the two people and one who invested in an ETF offering them 9%, they are extremely good. And I am using this not to discourage people from investing in the ETFs, the different mutual funds that offer high yield returns and high growth returns. But I wanted to kind of address to the person that, hey, because of the stability of the UGX to USD, over time, the person who took the direction to invest in the UGX bond made more money. Now the our FX has been stable for a long time. Anything can happen in the future. We do not know what might happen in the when the oil revenue starts to come in. Is it going to cause high pressured money before you know it, our FX going up? We are yet to see. But over the last 12, 15 years, the person, because of the return the treasury bonds have been offering for the last 10, 15 years, if someone had taken a bet, if someone in 2010 who had $100,000, if they had moved that money and invested in a treasury bond and they compounded that money, that person would be better than the person who would have invested in a high yield ETF in a global world, US, UK. No doubt whatsoever. And not because of anything else, but because of the compounding power. Why? The person in the USD is compounding at 9%. In the first 2 years, it looks like they are almost tight by tight. This person is compounding at 9%. I'm compounding at 14%. That means I'm 400 basis points over and above you. And if I compound for more than 5 years at that 400 basis point, it means the rate at which I'm doubling my money is faster than yours. So it's not true that people who, if you invested in you, it's actually, let me make it this way. It's not true that you investing in the UGX, the USD, at getting 8%, you're going to outcompete those who are investing in the UGX. There are instances when it can be better, and when it's going to be better, the future is brighter, but not always true. So to coming back to where it all started now, to Nelson, who believes that anyone who invested in who invested in the USD uh, uh, back then, they would have made more money than those who invested in UGX bonds. Not necessarily true. But also beyond that, there is so much opportunities. Anyone who has $100,000, you can diversify. Put some money in the treasury bonds, put some money in the ETFs, put some money in the mutual funds. Be willing to take a little bit of also more risks. So this video is mostly for those in the diaspora, those who have a little bit of more money that can appreciate this kind of services and investment. Thank you.